What's good? Welcome to Millions Made News, where we're all about breaking down the biggest moves in business, tech, and more. I'm your host, Carl Anthony, and on this show, we're digging into the stories that are stacking cash and making headlines. From Warren Buffett's billion-dollar plays to the hottest AI trends and the deals that are shaking up the sports world. Whether you're trying to get ahead in the game or just want the real on what's going down in the world of money and power, this is the spot, giving you the insights you need to stay on top. Now let's get into it. Y'all know the Oracle of Omaha, right? The man who turns everything he touches into straight up gold. Well, Warren Buffett just made another major move, but this time it's got people scratching their heads. So, Uncle Warren just offloaded a cool $982 million worth of Bank of America stock. Yeah, you heard me right. Almost $1 billion in just one move. But that's just a slice of the pie. Over the past few months, he's dumped about $5.4 billion of Bank of America shares. That's a big chunk of change, even for a dude who swims in it. Now, Buffett's been riding with Bank of America since 2011, when the stock was barely worth $5. Fast forward to this year, and Bank of America stock had been up 31% before the selling spree. But here's the kicker. It's dropped about 10% since he started unloading it. People are wondering why he's pulling back now after he's been so ride or die with Bank of America CEO Brian Moynihan for years. Even after selling, though, Berkshire Hathaway is still sitting on nearly 904 million shares worth about $35.9 billion. So let's not pour one out for Bank of America just yet. But the question is, what does Buffett know that we don't? Stay tuned, because moves like this from one of the greatest investors of all time might signal a bigger play coming down the pipeline. Okay, so let's talk about the new king of Wall Street. If you're in the game, you know it's NVIDIA's world, and the rest of us are just living in it. We are talking about a company so influential that folks on Wall Street are literally holding their breath for its earnings reports like it's the Super Bowl of stocks. NVIDIA's been running the AI game and has been the main reason the NASDAQ 100 is looking so strong this year. They're part of the Magnificent Seven of mega cap stocks, and some say they've been carrying the market on their back. So why all the hype? NVIDIA at the forefront of AI technology, and with everyone from tech giants to startups buying in, the money just keeps rolling in. Some analysts are even saying that NVIDIA's earnings might shake up the market more than Jerome Powell's last speech at Jackson Hole. Yeah, it's that serious. This is one of those moments where everyone's watching to see if the AI hype has legs or if we're just caught up in the hype cycle. Either way, NVIDIA's holding the keys to the kingdom right now, and that's just something you can't ignore. Moving right along, Apple's been slicing and dicing this year, and it looks like the axe has swung again, this time in their digital services group. Yeah, Apple just cut about 100 jobs, and this isn't just a random slash. There's a method to the madness. Here's the deal. Apple's service division, think iTunes, iCloud, and the App Store, has been the company's cash cow, especially when iPhone sales hit a wall. But even cash cows need to be kept lean, right? So they trim the fat in areas that aren't pulling their weight anymore. The biggest hits came to the teams working on Apple Books and even some on Apple News. They've been told to pack up if they can't find another spot within the company in the next 60 days. Apple Books, not a big priority anymore. Apple News, still important, but they're cutting some corners. Now, layoffs at Apple are rare, but when they happen, they make waves. This is the fourth time this year Apple's made cuts, and they're not alone. Cisco and Intel have been swinging the axe even harder. So what's the takeaway? Even the big dogs are feeling the pressure to stay agile in this fast-changing landscape. Let's shift over to some semi-football news, but not quite. When you're not just winning on the field, but also cashing in off it, that's the Kelce brothers' way. Travis and Jason Kelce just signed a monster $100 million podcast deal, and yeah, we got to talk about that. So these two NFL stars who've been breaking ankles and hearts on the field just bagged a 3-year deal with Amazon's Wondery for their podcast New Heights. That's right, $100 million just to talk about football and life. It's like getting paid to kick it with your brother and shoot the breeze about the game you love. The podcast launched in 2022, but it blew up when Travis started dating Taylor Swift. Y'all know how the Swifties roll. They hardcore. The podcast shot up to the 14th most popular in the country, and their YouTube channel blew up, gaining 350,000 subscribers in a month. The power of Swift, right? This deal is a big win for the podcast industry, especially when big money contracts were starting to look like a thing of the past. But if you're pulling numbers like the Kells brothers, it's a whole different ballgame. Amazon's got deep pockets, and they're betting big on the Kells boys to keep the hits coming. All right, crypto heads, it's been a wild ride. Bitcoin just took a nosedive, and the Fed might have something to do with it. Let's break down what's going on. Bitcoin dropped over 6% this week, and it's the biggest fall we've seen since early August. Ether followed suit, slipping over 7%. What's causing this slide? Well, it seems the excitement from Fed Chair Jerome Powell's hints at an interest rate cut is wearing off. There's also some chatter that the U.S. government might be offloading some of their seized Bitcoin, which could be adding to the pressure. Bitcoin's had a strong year overall, climbing 41% and hitting $73,798 back in March. But since then, it's been struggling to keep that momentum going. The markets are also keeping an eye on Nvidia's earnings, with some wondering if the AI craze might have peaked. All in all, it's a tricky time for crypto investors, but if you know the game, you know these dips are just part of the ride. Hey, so I got a question. You ever feel like the more you scroll, the more bored you get? Well, you're not alone. A new study just dropped some knowledge on why TikTok and Instagram might be messing with your brain. Researchers from the University of Toronto found that hopping from one piece of content to the next actually makes you more bored, not less. The study had folks watching videos they couldn't skip, then compared their experience to those who could jump around. The ones who had to stay put actually enjoyed the content more. So, why does this matter? Well, we're living in a world where kids are growing up with screens glued to their faces. The constant switching between apps and videos is creating a cycle where we're never fully engaged with anything. The boredom gap. It's all about attention. When you're not fully immersed, you're left wanting more, and not in a good way. For parents, this is a wake-up call. It's not just about limiting screen time. It's about teaching kids how to focus and engage with what's in front of them. So next time you're tempted to jump from one TikTok to the next, maybe try sticking it out. Who knows? You might actually enjoy it. Thanks for tuning in to Millions Made News, where we bring you the latest and greatest about getting to the bag. Peace.